Hello, welcome everyone to the weekly Delphian meeting. So today's agenda, we'll go through market update, earnings trades update, and then Joe will go through his analysis. Just a reminder, next week we will not have a meeting. We'll resume on the 27th. But between now and then, earnings plan will be published probably by next week, and we'll go through earnings results on the 27th. So that's the plan. Let's get going. All right. Um, Overall, we got SPX, NDX, Russell, all still in state one, holding strong. You can see all the sectors green, um, almost everyone in state one. So very strong market so far. Like big picture, from last week, green pie went from 60 to 65. So just been that kind of steady climb higher. State ones, we are over 45% now, so we're technically overbought for the market. So I'll pull up the states here, states 1 and 8. So, our previous recent high was right around, getting close to 52, over 51. So we're getting close to that again. You can look at the state twos since last week, kind of steady climb down and then had a little bump up, just steady kind of in the sevens, building up a little, those eights going into sevens. So that's just been fairly bullish overall. This, kind of outside days, you get a few down, little down, but just been grinding higher overall. Um, I think it's been this is the last time we've had a pretty good state one over 45. That was back June 2021. Since then, the high was here November 2021 at 52 and haven't got close, this last one obviously got close to that 52, but we'll just have to see if that 52 is kind of like a resistance type thing, or if we can climb higher. Who knows at this point, but still grinding higher. The highs are just showing us kind of the green light. We're still getting highs, um, 52-week highs, and the lows are pretty much flatlined. So haven't had any bump in those since October lows, and then since then just flipped over and pretty much been straight up almost since the end of October. So same thing here with the 20-day SMAs, is pretty much flatlining with this huge gap between them. And overall looks good. Same story here with bullish bearish. Tried to test that crossover point around 50, and it's just been slow, steady grind higher since then. Once that comes up here. So we got near the crossover, and then obviously that held, and since then, about a month ago, just been grinding higher. So obviously not overbought by any stretch of the imagination here. 65, we were up in the high 80s here. So this is telling us there's more room, but the state ones basically telling us oversold. So kind of a little conflicting there, but that's it for the market pulse. SPX is grinding, grinding higher. Actually, getting pretty close to the max move since 07. That was 19, so we're only 4% off of that. So not much on this chart, but if we go to the actual chart here, did well above, that's the 200, well above the 50, well above the bottom of the range, which is 5,000. Put the line here. So that's the bottom, tops up here, 5,400. What I did, Joe and I were talking last week, kind of looking at different MAs. So we put in the 20. So you can kind of see this been pretty good support on this run up, since this crossover here, been pretty good support all along the way. So I would kind of use that right now as, kind of downside support. Um, as we keep moving up, I would use that as downside support. So we also have, the 5,000 here. That's the bottom of the range, and then the 50 days below that 5,000. But I would look at this 50, 75. That 20-day. Because we're in such like a huge momentum move. I would I would start using that as kind of like a downside um, indicator. Since this crossover, it's only closed once this day right here on January 4th, below that 20-day EMA. And you can see, the close was 46.88. It was like 8 points below basically. Since then, every other day, even here, been above that 20-day. So I would kind of incorporate that at least for this move, this huge move, as a downside kind of flag. Staying above that, obviously, we'll keep running. So I think we're 100 points off of that right now. So not even close to that, 20-day. So, other than that, you got top side, 5,400. So it's kind of where we're at here. Russell, different story. So, modeling here, 2,100, we expected resistance between target 1 and 2 at 1 day, popped above there, 2115, ended up closing below it, 2083, and just turned around since then. We're a little higher today, 2077, but I'd still expect that 2100 to provide pretty good resistance. Meanwhile, SPX is walking up, step by step, slowly. So, um, this one's really rate driven. And, if we look at the rates, the 10-year, so we dropped down to like like low fours and kind of pop back up 419. We had a little kind of hot, not like huge beat on the inflation numbers, but just a little hot. So, uh, yeah, but definitely, way off the bottoms and way off the top, but kind of finding its footing here. And, we'll see. We have more readings tomorrow. Core PPI year over year, month over month. So, PPI. So those could move, depending if they're outside expectations, but those are tomorrow. So overall here, just kind of chopping in state one, and downsides 19, and we'd expect support also at this basically 2,100 entry price. So between 2,100, 20. And then we go to the charts, more the same. So we did, we've made new highs, those three tops that we had before, 1, 2, 3. So we made new highs here, and we made a new high from this one, got up above 2,100 briefly, intraday, but, getting above that, staying above that, it's obviously going to be very bullish for the markets, but I'd expect continued resistance in that 2,100 range. Last time, this Fed day here, and then before that, was back here, and end of 2021, we were above 2,100. So it's been a while. I'll just draw the lines real quick. There's your 19. Oh, come on. All right. There's your 19. There's your 21. Yeah, it's a good sign. I mean, just kind of like SPY. The longer we hang up around this area, the more likely we're going to break it. So, um, the 20 doesn't really matter much on this one, but the 50's been important. We talked about that, quite a few weeks here, since that move up. So I'd key off the 50 on this one for downside, and that's right around 2000 and, well above, 200. So top side 2100, downside, 2000, as far as its momentum move. So we got the 20-day on the SPX right now and the 50 on the Russell. That's kind of where I'd leave those, but market pulse is kind of showing two different things, right? So we have the state ones overbought. Um, I wouldn't say overbought based off of bullish, but as long as we're getting these green new highs, I mean that's still, I think, one of the best indicators. Pie's growing, and then we're getting all these green candles and nothing on the lows. So still looking bullish, even though we're getting overbought on state ones. So, but let's pull up. So we're a week out from the Fed. Nothing gonna happen in March, May. Nothing. So that one's moved a little bit since last week. 76 to 89. So anything over 90s, nothing's happening. So really, June's still the first cut, and longer term, end of year, not much changed really. Just a few numbers flickered, but pretty much still looking for 75 overall for the year. So three cuts, three-quarter cuts. So that's where we're at there. Balance sheet getting near our 7.5. So that should happen in the next week or two. Now, we had that BFTP expire on Monday, so no real noise from that yet. I haven't seen much as far as reverse repos or overnight lending or anything like that so far. So looks like we're in the clear so far. But we'll be crossing this in the next week or two. So, and that just kind of matches up with last time. And we dropped from here to here, and they turned everything around because the overnight rates just went bonkers. So, so that's it there. Had a interesting chart. This is momentum stocks since basically the last 10 years. So this is this
Wow,
year.
what is that, Josh? Who?
This is momentum stocks, best start of the year,
Yeah.
at least, since past decade.
Looks like a brain scan.
Yeah, I mean, pretty crazy. I mean, I was kind of looking at it. So we have this little purple, we have like basically four others, purple and black. Um, so I think I don't know if that's 14, but definitely 2020 is one of them. Obviously had that one. This other kind of purple had a pullback, but you have this one, and even this one down here. They pretty much like leveled out and then like cranked higher. So it's like 50-50 coin toss. Obviously these two kind of happened in the same window though, right? So that's back in like Feb. Things started turning for the momentum stocks, but definitely an interesting chart. Just the move is at least within the last 10 years is insane. So, but no real indicators. I mean, I think all of the ones that started out hot, um, ended up positive because we only have a few that were negative here. So, um, the black one, 2020, which is pretty much the last cycle, had that huge down move, ended up, second best, in the last 10 years. And then these two were just strong from the start, 19 and 2022. No, not 2022. What's that other one? These colors aren't the best. That's 2022 down there, minus 19. That's 2017. So this one's 2017 here. 17, that's 2020. That's 19 there. But all the ones started out hot, at least stayed positive. So that's a good sign overall for the markets. But, 2 out of 4, these other ones that started pretty hot, had pullbacks, major pullbacks, but, those were all in this kind of window. So, but even the ones that got hot, it's kind of like flat, consolidation, grind higher type thing. So I definitely think we're due for some consolidation after this move. Hopefully we don't see, this, but like 2 of them did, but just a very interesting chart. I mean, that's quite a move. So that was it, market wise. Open up to questions, comments.
This is Dave. My comment for the week. I've sort of expected a kind of a little bit of a pullback toward that 5,000 mark in the SPX, but I haven't been trading that way. I've been trading the way I think sentiment is going, and it's been bullish. So trading's been working out, but I've been expecting more of a little bit of a pullback here. So the longer it keeps melting up, the longer it keeps just melting up, I think when it does pull back, it's going to be harsher.
Yeah, I agree.
That's just the way things go. But we closed yesterday at an all-time. We closed yesterday at an all-time high on SPX. I don't know if you noticed that or not. The close. Joe kind of watches the closes. I do too. Typically on Fridays. That's my kind of like I just put points on the graph of every Friday's close of whatever I'm looking at. That's kind of where I try to follow Joe's subscription there, and that's my evaluation on how trends are really going. But I kind of expected things to cool off a little bit. Not maybe go down, but maybe not go up so fast. Because I think the definition of cooling, well, it's things are going up not as fast, so that's cooling. That's the definition of cooling nowadays. But so I've been surprised, but I'm hanging in there with the trend is until I see more evidence, and I don't see volatility events out there in the future. Even tomorrow's, even the upcoming inflation data is going to be far out from where there's an expected or not expected rate cut. So we got a couple of months out there. What's gonna stop the float up? I just don't see it, and that's my opinion. And will like to hear what other people say, but that's the way I feel, and that's the way I'm trading. So just saying.
And Josh, I'll just chime in. I mean, to Dave's point, I mean, you had Friday was a brutal day in the markets. I mean, we've had this monster run. Friday was brutal. I mean, you had these big bearish engulfing patterns. You had gaps to the upside on openings. A lot of stuff closed near their lows. Again, bearish engulfing candles all over the place. NVIDIA, NDX, SPX. And then, just like Dave, I was thinking, okay, well, it's certainly at a minimum going to be a significant test for the market early this week. And essentially Monday was sideways. There was, you got some lower lows in terms of price, but it was an absolute nothing burger. And then yesterday, boom, off we go. And I think
Right.
it just speaks to the damn near historic strength in this market. I mean, I don't know what's going to stop it, and I don't think it's going to stop anytime soon. So just agreeing with Dave.
Yeah. Also, I mean, to Dave's point, I mean, if we keep just shooting higher, I think the risk goes high. I mean, we need, you look at like these markets in here that were healthy, strong throughout the year, you need some consolidation, like can't just be like higher, that's a very bubbly type of action, so.
No doubt about it. But I think we may have, a generational market here. And I think, I think the comparisons to the 90 tech bubble are probably not inappropriate, except that companies are earning money now. And if we're to pair up with that time frame, we're just getting started. There's a hell of a long way to go. And of course, when we finally get to a point where the buying is exhausted, it will be violent and brutal to the downside.
Right.
But I think we may have a parallel to that here.
Mm-hmm.
You're starting
And
to
it's driven by AI. It's clearly the impact of AI on earnings and product efficiency, on just efficiency throughout the world is yet to be determined. But go ahead, Dave. Sorry.
Well, I'm sorry. I apologize for interrupting there. I apologize for all my interruptions because everyone's an interruption. I apologize for
No
every
need, Dave.
but yeah, AI. I agree with you on the AI buzz. It's software. What software is never going to quit. So as long as they keep talking it up, it's there's no. How do you disprove AI? It's hard to do. But the other point about watch Apple. Apple's sort of like I was sort of expected the SPX to start looking more like Apple's chart because Apple's one of those top mega caps, and it just is getting punished because it doesn't have any AI story to the iPhone. Doesn't really have much of an AI story that can go with it. AI is not going to happen on an edge device, and that's what Apple's all about, controlling the world through your phone. So it's AI buzz. It's going to just keep things rolling but watch Apple. If more of the big seven start to look like Apple, and all the ones that are still up there are up there because they all have a big AI story. Apple's the only one that doesn't really have a great AI story, in my opinion. But it's the most widely held stock. So if the widely held stocks start to cool a little bit, then that would be at least healthy, and a little bit of a pullback, I think, would be even a little bit healthier. Then again, just opinions.
Yeah, Apple's definitely been hit recently. We were watching a 180 level. As soon as that broke, it basically went right to 170, and it's kind of hanging there right now. So, but I still thought like, okay, people are starting to move money out of Apple and like Nvidia and chasing the AI stuff. But anyway, it's a cool chart. Thank you, Twitter. All right. Any other questions before I run through earnings here? Comments? Okay. Like I said, it's beginning. The earnings plan will be published, so you'll start getting alerts. Within beginning of next week. Finish the testing this week. And then, no meeting the 20th, and then the 27th, we'll go over last quarter's results and start tracking the new trades. We had one bullish runner. It's a crowdsource that closed out pretty quick. Enter on the 7th, got out 12th, hit the profit target. That's the only one there. So these are looking good overall. One fairly minor loss, and then the rest wins. So 6-1, pretty good there. Everything has been pretty good. Bearish runners are still holding on. we got 6 open trades, so all the closed ones. Target, so that was a 1-dayer hit the profit target. And then I think last week, what was last week? The 6th, yeah, so ZS, I'm not sure what that one is called actually. That one closed out for a profit target too, so have only one loss here, for the closed positions, which is real good. But the open ones, we do have some losses. This is an incorrect print. I was looking at the options chains; they were zeros. So this one's actually down. You can see current price versus stock price. We're looking for a bearish. This thing's down like a couple hundred. So EOG also down. Oil's been kind of going strong here. Yeah. So these ones we're still up, but we got quite a few here that need to turn around. And I got one profitable here. So, but overall, despite this, it's actually negative. We're should be up, slightly overall. Every other one's, looking good. So, hopefully we get some more bearish action here, but for these trades, but overall should be a profitable quarter. That was it for the trades. I don't think that non-mover closed out. I think that was before, yeah, F&B. So I closed out on that Wednesday. Nice profit, doing well. Had one big stinker, Delta, and the rest were real good. So everything's looking good. Just need some bearish runners again. So that's it for the earnings trades. Any questions, comments on that? All right, well, I'll hand it over for Joe's analysis.
All right, Josh, thank you. Let me grab this thing somewhere here. I gotta see. There we go. And good afternoon, everybody. Thanks for joining. As Josh pointed out, it's really remarkable the sectors. I mean, you get 10 out of 11 in state one. I mean, it's just mind blowing, but it speaks to the strength of the markets, I think. So a few charts to go through, and then a couple of various ideas. Not the first chart I wanted here. Yeah, I just wanted to, basically TLT. We got PPI tomorrow. CPI we had yesterday. Markets were fine with it. Kind of guess the same thing will happen tomorrow. More than anything, it may be relief, get the numbers out of the way, and off to the races we go again. We shall see. But I want to just, pull up the chart a little bit. It's just kind of sideways actions here, and I think, we've bottomed out around 408 in yield. We're up to 418 right now. So I think the 10-year will be worth watching coming out of the number tomorrow to see whether we get, just stay in this narrow range of yield, but, well below, I guess, maybe we got down to 388 quite some time ago. We've been above 4 now for a while, and the recent low being 408. So, we'll see what comes out of the PPI tomorrow. As I mentioned in the conversation with Dave, I thought Friday was a big day for the markets to really, test the strength of this market with the bearish engulfing patterns. Here's SPX, it's longer term chart, so it doesn't show up real well. But, you had, there's Friday, bearish engulfing, kind of sideways down a fraction, on Monday, and then off to the races again yesterday. Just, speaks to the strength of this market. As, Josh pointed out, current move 15% in SPX, MAC move back in 2011, 19%, not too far off there. Long way to go in terms of max days. So, we shall see. NDX, really kind of the same thing. Just, little bit of sideways actions here, but, that is nothing but necessary and healthy in this market. But, we got no meaningful follow through coming out of Friday's bearish engulfing pattern, which, I thought was interesting. Josh talked about that 20-day moving average back to the SPX at 50.75, 100 points from there already. Recent short-term lows in XPX are just a touch lower than that at 50.58 and 50.56, back in here, a couple weeks ago. So, a long way to go to get there. I think with PPI's numbers tomorrow and probably get a sense of the next leg, whether we're going to go. I mean, it just doesn't seem like we're going to go down in any meaningful fashion. And we go sideways and trend down, lower for a couple weeks possibly, but, the market sure doesn't look like it wants to do that to me. I think, the surprises continue to be to the upside. I'll bet there are a lot of people underinvested in the market, and it's just not going to wait for people. Give them a chance to get in. So Dave spends a lot of time in the semis, and semis obviously have been, kind of the leadership tied into the whole AI theme here. So I just thought I'd pull up the SMH just so people can see, exactly what the components are and the percentages. And, the SMH is almost 28% NVIDIA at this point, followed by Taiwan Semi at almost 10%. Advanced Micro, which has had a monster move in this market as well, about 6%. Broadcom just over 5%, and then a handful of names we all know make up the balance. So that's the Van Eck Semiconductor ETF, and here's its chart. Of course, full well it's state one, been there for a long time. Absolutely incredible move, which, has exceeded any move in the past, according to our data. So, somehow we got a 50% move in this thing, in the last 85 days. Just really remarkable. Clearly the leadership of the market. And this shows very well Friday's bearish engulfing pattern. And, we can't even get a retracement on the last, dip, which was, middle of February. We can't even retrace that, let alone going back to the January lows where we tested, state three targets. So, I think this one's worth watching. The recent short-term lows, 219. As long as we can hold that, no reason to think that we're going to get anything meaningful. I mean, after the run-up we've had, I sure would have thought, as I said earlier, we would have gotten, some back and fill after Friday's reversal day, but not to be in this market. So SMH, let me just pull up the longer-term chart below. As you may have noticed, we changed the zoom levels. So the default when you pull up the state modeling charts is 1 year. We're giving you a 6-month look, as well as a 3-year look, all of which incorporate state modeling moves. I mean, look at that move coming out of, the October lows. And then, the last zoom choice, we realized the state models don't show, but it just gives you, the charts going back to 2007. Obviously, you can play with the little bar underneath to shorten that. But we've moved that around. Hope that works for you. If you have any comments, that you'd like to see something different, let us know. But I personally like it. So, but always open to input for sure. That's SMH. Let's take a look at NVIDIA and then actually Taiwan Semi. Same situation. You get the bearish engulfing on Friday. Monday kind of a nothing burger, and an up day yesterday. We're down again today. NVIDIA didn't, and it all happened so quick. I mean, we were 900. The next thing you know, on Friday, we got as high as 975. Yeah, I think it was only Wednesday that we traded 900 for the first time. Actually, no, it was Thursday. So you get up to 975 on the intraday highs on Friday. If the market's, going to hold the lows of Monday and start to get going again, I would be sure that the story is going to be, when's NVIDIA going to trade 1,000? It doesn't mean much, except that it'll just be a talking point for the talking heads. As long as we hold this 841 level. Last I looked, we were at 888 down today. So it'd be interesting just to see whether, as Dave said and Josh said, we just kind of move sideways for a while, or the market turns around and roars to the upside again. We shall see. And I mean, just yes, Dave.
Sorry for interrupting again.
No.
I'm going to keep apologizing because that's the only. But I like to stop you on certain charts. So that's before you move on. When I feel you're going to move on, that's why I step on the toes. So again, sorry for that.
Please.
But one thing that NVIDIA reminds me of, I don't know if you remember back in the early .com days, the 2000 kind of time frame. But NVIDIA is performing a lot like, at least on the chart movement, a lot like GLW or Corning did back in those days. I don't know if people were investing back then, you can't not have remembered Corning, because it was, they make fiber optic cable. So, there's the fiber build out that was going on like for a long time. And it's like, that's the way it feels like NVIDIA is going to keep going up until it doesn't. And then there's going to be some risk for the buy and holders at that time. Don't know when that might be another decade out, who knows? But it's like, it feels a lot like Corning did back in those days. I just got the feeling the stock moves in the same angle, if you will, or the same whatever. The slope of the line is similar. Sorry. Anyway, I just thought I'd throw that back in. It's like one of the one-off stocks that's an enabler for a major shift in what consumers are going to rely on in the future. That's what Corning was, and that's what NVIDIA is kind of like feeling like it is now.
Interesting. I have to go back and look at that chart. Someday maybe we'll pull that up in a future call. One comparison I've heard some of the talking heads on TV in terms of the .com bubble and NVIDIA has been a comparison to Oracle back in the day. I don't know. I haven't gone back and looked. One thing they did talk about is that, I think Oracle, was trading at some absurd, 3-digit multiple back then. But I think, comparisons like this are useful. If we believe that this period might correspond to the late 90s, just to get a sense of the potential magnitude. We're not going to be picking tops. That's not the game. But just, to maybe not underestimate the potential upside in some of these moves. So, I'll have to go back and take a look at GLW. Dave, thank you for that. Did one other one I wanted to pull up because it's the second largest in the group is Taiwan Semi, and pretty similar to it doesn't have the magnitude of the move of NVIDIA certainly, but it's had a heck of a run too. Current move up 46%. So these things are just they're the place to be until they're not, and when they're not remains to be seen. I'm guessing that's a long ways off. XLK, one of our leaders, as we know, going back, it's the one that went into state one day before NDX, and I think maybe our longest in terms of time. Just want to kind of review. David pointed out Apple there in terms, it's interesting. We got Microsoft, we got Apple, NVIDIA. It's 7.5% in this index. But, still holding up there. Certainly has slowed down in its move to the upside, certainly compared to something like SMH, because of, the difference of the components for sure. But there's XLK kind of, little bit of a sideways move here, especially with, Apple kind of going sideways. There's Microsoft, same thing for a little while here. And there is Apple, which, we've been talking about for a while and, sort of back and filled. But I think to Josh's point, these things, which are held by so many, a lot of people, liquidating, these things at this point and getting into some of those semis in a much bigger way. So they were the only charts I wanted to kind of talk about. A couple just, I don't think we're anywhere near a meaningful top in the market. And so over the next period of time, I want to try to figure out, okay, if we have anything like a run in the late 90s, what are some of the telltale signs? And, one thing I pulled out of the AAII weekly, and as it turns out on, I guess over the last year, what's the high is, 52.9. So we're at 51.7. So, okay, maybe on a short-term basis, maybe this is going to suggest, we're going to go sideways. But that's not really what I'm looking at. And, I think the key, as I spend a little time on this thing, is the differential between the bulls and the bears, not the actual numbers themselves. And the reason I'm a believer in this is because, the extremes between bullish and bearish in this AAII, which this thing goes back, I think, to the 80s, but the differential between bull and bear were all, the top, let me see, for the top 6 readings in that differential were, lo and behold, in the year 2000. And the highest differential happened to be, the beginning of January in the year 2000. You had 75% bulls and you had 13% bears. You had a 61% differential, okay, between the two. So obviously 76 was real high and 13 was real low, but that differential, and you saw those, and so there was a 61% point differential between the two throughout the year 2000. That differential ranged from about 46 to, and that was on the low side, to 55, with this one extreme, being north of 60. And, where are we now? We're at 30% differential. So I'm going to keep my eye on this thing going forward. And I think that could be a real significant telltale sign when you just start to see, that differential widen out north of 45 to 50%. So just one thing I wanted to offer today in terms of, potential signals for, a top somewhere down the road. One thing, as I do homework on our pie numbers, what I don't think will be a signal of a top is if, the pie gets to 85%. I think what those extreme numbers suggest more than anything is future strength in the market. And let me just go through a couple numbers. We've got 4,327 days in our database. The pie has been over 90%, a total of 5 days. All of those days were in June of 2020. Here's the SPX chart. And here's June of 2020. And so, I mean, there's no, and we were at 90%, okay, 5 days. It's, less than 1% of the database, okay? There's no way that was indicating any meaningful top in the stock market. All the market did is run, for what, almost 2 years, well, certainly a year and a half from that point. That's at 90%, the total extreme, 5 days. But then, above 85%, we've had 59 days, 1.3% of the time. And, most of those periods, well, actually, so we get 85 days above 59 days above 85%, the pie being green, 1%. And the majority of those 59 days were in 2020. And then also at the beginning of 2021, late January, early February. Okay, and prior to 2020, you have to go back to 2012, 2010, and 2009 to find any days where the pie was above, 85%. So, recent history above 85%, was basically plenty of 2020 and, the early part of 2021. So again, suggesting to me that it speaks to strength in the market, not a top. So, and, I could go through the same thing with above 80%. Just in terms of percentages, there have been 315 days, so a little over 7%, where the pie's been over 80%. And again, that to me suggests that, when we're trying to figure out that we're getting, potentially close to a top in the market, we're not going to be looking for the pies at 85 and 90%. So I'm going to keep working to see, I got some ideas and keep working to figure out, some things we can look to. For now, it's the AI differential. Got to be, well north of 45% as maybe the first thing to hang our hat on. And it got a long way to go there. So that's it here. Anybody has any comments, feel free. Otherwise, Josh, back to you. And, as Josh said, we'll miss everybody next week. We'll be out at that university conference, which we sponsor each year in New York City, called Game. It's the Game Forum. If you want to Google that, you can see what a great financial educational conference Quinnipiac University puts on for students from around the country. Over 120 schools, 1,200 college students. I think there are about 60 speakers. Ashok, Josh, and I will be part of that speaker group. So I will be missing, next Wednesday's meeting, but that is the Game Forum. If you're interested, Google it. So that's it from here.
Say, Joe?
Yeah, Dave.
On your days where the pie chart is an extreme, you mentioned back in 2020 where all the 5 biggest days were. Well, that was in the pandemic, right? 2 questions.
Coming out of the pandemic.
Two sort of questions is that I suspect, but I don't know, just guess that volatility or implied volatility was pretty high back in those days too. And the concentration of all the money in the market was in fewer stocks in those types of days too, would be my guess. Which kind of says that, well, the SPX is not a bad market, not a bad index to be in when there's volatility or anything, because you can kind of throw out the forget where the charts are in high volatility, because they kind of have to throw them out because of the volatility. And it just sort of seems like that way. Be interesting to see that what your future work does there. Maybe talk to you offline about that, talk more about the things that I look for that might guess at what might be correlating or not. Anyway, I'll talk to you offline. But
Okay, that sounds good. And that's a good word you use, guess. I'm with you. You know, we are guessing at this stuff for sure, but
yeah.
and it's certainly science. It's art, not science, for sure. So yeah, happy to do that, Dave. Thank you.
Yeah, definitely art.
Yes, indeed.
Okay, thanks, Joe. Anyone else before we wrap it up? All right, yeah, just a reminder, we will not meet next week, so it'll be 2 weeks from now. We'll see you then. Thank you all.
Thanks, everybody.
Thank you.